is the daily market review or DMR? Okay, the DMR is the technical analysis of the market, where we break down what happened today and what to expect tomorrow. Okay, so what will you learn? You're going to learn how to look at the charts on the hard right edge. In other words, you're going to look at the chart and be like, just like how Steve says, all right, I see a peak formation, I am in level 3, I'm expecting this, that, the other. Okay, so you're anticipating what the pattern is going to play out like. Okay, how to do homework, we give you homework in the curriculum. How to check down your pairs before trading. Okay, so you're going to see, okay, I'm expecting stop and low rise, what are we looking for? To know your bias for the day and what to expect. What entries and exits you should look for. Okay, in the curriculum we talk a little bit about what the entry candles are. Okay, what's the best stop loss and where they should be placed. Where to look for your stop hunts. Are you expecting stop hunts in the 200 EMA, for example, in level 2? Things like that. Okay, what a confirmed M and W pattern will look like. Candlestick patterns which matter. Not every pattern matters. There's certain patterns at a second leg, for example, matters. Okay, and levels and how to trade in line with the market maker. Remember the W, V, V, M, how to trade in line, how to grab those V's, where to look for them. Okay, just a quick thing about DMR. They held from Monday to Thursday from 7 p.m. Eastern to 8 p.m. Eastern. And the curriculum is usually held after the market analysis on a Tuesday. All right. Monday, Jim does something with the flashcards. He goes over a couple of flashcards. Pretty interesting stuff. And then Tuesday, I do the curriculum. Or we have guest presenters. Okay. The DMR is also recorded and posted in the password-protected DMR section of the forum for 4 weeks at a time. So we keep about a month on average of information in there. All right. Okay, so what is the DMR curriculum? The DMR curriculum is an added bonus to the market analysis, where we go over Steve's market maker method in a step-by-step fashion and address all the main points learned during the live class and online class too. Okay, so we take each segment and break it down. There's homework required, things like that. Okay, and the curriculum is part of the daily market review session and is held after the market analysis section. Okay, so here is the breakdown. So what we're going to talk about this fall is, first we're going to go over the M's and W's. Okay, because that'll go into things like your anchor, your level 3 anchors and things like that. Okay, intraday as well as anchors, big M's and W's, multi-day, multi-sessions. You get a chance to watch it on the market, and you're going to mark it off. That way you're not influenced by money or anything else. You're just watching it on the hard right edge. You're trying to pick the right entries. Okay, that should be the focus. And then you get to demo trade it. And then we talk about the A's and B's. Once you mark the A's and B's, and if you mark it on the hard right edge, this will give you an idea of what's going to happen the following day. Like Steve said, I see an anchor next day I'm waiting for. Straight away, stop and high drop A, or the safe trade, right? So that's the expected move and what we're going to look for. All right, then you get a chance to demo trade them as well. Right after you're done with this part of it, the levels become very simple. All you do is like, all right, I'm expecting A1, I should be in level 1. I'm expecting A2, I'm in level 2. Okay? Then we talk about entry candles. What are the candles supposed to look like? Inverted hammers, railroad tracks, cord of wood, star pattern, things like that. Okay, then Jim is going to do his high-low drill. We talk about some setups. We talk about Brinks, safety trade. At some point, if we have time, we talk about 22, the 33, all that good stuff. All right, we talk a little bit about swing trades. We have a guest presenter that comes and does that. We talk about counter trend trades, when to take them, when not to. Like level 1, do not counter. Level 2, you can trade both ways. Level 3, you can trade both ways. And what should the setup look like on a counter trend trade? Trade management. Okay, we can normally have a guest presenter for that. We talk about TDIs. And then we start going to the important things like signature trade. All right, I'll give you examples of those. And we talk about a trade plan or a checklist. How do you validate your setup? Okay? And then we have something called accountability, where every week after the curriculum is over, you bundle your trades, you analyze them, you send it to one of us. There's 4 of us, so it's pretty good. And the goal is 80% hit rate. Okay?
So this is the euro dollar, and we always do our analysis first on the 15-minute chart. This is yesterday's activity. This is the My Asian box. It's dim gray, as you can see. I don't use blue. And in fact, I don't use the TDI, so you won't hear me talk about the TDI. I'm pretty much a price action trader using Steve's information that you all have been exposed to and know. So yesterday on the euro, we gave a bias that we were looking, the pair was in level 1 long. Here's our peak down here, our peak formation low. This was Friday non-farm payroll. We had a nice thrust up on Monday. Yesterday, price fell back down into this range here. So we were looking at some more upside into the euro. And remember what Steve said. How do you know a peak is locked? Well, you see in this case, this was what we were asserting was the peak formation low, is when you see a W pattern the next day or two to lock in this low. So this low is now locked. Okay, so we were looking for more upside. You can see during the Asian session, price actually moved up quite nicely and the box was blown. The box being blown mean over 50 pips. It was actually almost 76 pips in width. And here you can see beautiful 2 railroad tracks. Okay, this was a great long trade. I actually took this trade while we were on the webinar last night. I was listening to Steve and I saw this setup and actually entered a trade here. I'll show you my trades at the end. Then coming out of the box, remember what Steve said. If the box is blown, meaning that it's more than 50 pips in width, the best way to trade it is to short off the highs of the Asian box and to buy off the lows of the Asian box, assuming you have some sort of confirmation to take those trades. So what did we see happened here? Here's my lines. I draw these. They're very valuable to draw your high and low on the box, just so you can see where the price action falls. Here you can see price dipped down, didn't really do much, wasn't sure what it was going to do, then came up here and threw the shooting star pattern at the Asian high. Okay, this would have been a good place actually to enter a short trade, knowing that the moving averages are close by. You're looking for just at least a move down to here and possibly down to the 200 and even better down to here, because we want them to hit the stops low because we're looking for a long trade and then rise. Okay, so in the London session, this is the London session here. You can see, in fact, that's what they did. They dropped price, came back up, hit the stops of the people who did go short and move their stops to break even, and then continued this nice, beautiful acceleration to the Asian low. This is when I woke up this morning, right here after this candle formed. It was 5:45 California time, so almost 9 a.m. New York. And that's usually about the time I wake up. And I saw this green candle form, and I actually got in a long trade here. This is like a morning star. I wanted to trade off the lows of the Asian box since it was a blown box and trade long. And you can see price accelerated immediately up here, came back, hit the moving averages, the 800, the 13, and the 50, and then accelerated up to the high. So now, coming into tomorrow, here's the Asian box. It's already starting to form. So we are looking for some more upside on the euro. And if I look at the 1 hour chart, here's the 1 hour. You can see off this peak low here, we had 1, 2, 3. Price pulls back, makes a beautiful W, comes back up, drops down, and again throws extremely powerful railroad tracks on the 50, 200, and 13 on the 1 hour chart. We're still looking for some more upside potentially. Now, remember, you don't want to trade long if you see a perfect M pattern. Take the trade, because what we're hoping for, or what we would be hoping for, is for them to hit the stops low and then rise. Okay, so that's what we're looking for tomorrow, level 2 to the long side on the euro. Okay, the euro yen pretty much had a very similar move. Friday, peak low down here. The W locks that low into place. And we said yesterday we were looking for some more upside today. And in fact, the box was blown. You can see price came up to the high here and didn't give you a reason to get short, which normally, remember, you're going to look for reasons to short off the high and buy off the low, and the box is blown. There was no confirmation to take a trade like there was on the euro until you got up to here. But then there's no context, and you'll hear us talk about context. There was no context here. There was no first leg over here. There was no prior high. This was just kind of in the middle of nowhere. This was them hitting the stops and consolidating for a couple hours, dropping back down to the 800 and yesterday's high of the day, throwing a morning star pattern right here for you to get into this long. Because remember, your bias would have been to the long side coming into the session today. Okay, so now it looks like the pair has made a beautiful 1, 2, 3 to the high, and this really looks like it could be in level 3 now. And what Steve says is when a pair is in level 3, you want to be flexible enough to trade both ways, because it will be the most volatile level, meaning it can go both long and short until they assess where the money lies and which way they're ultimately going to take the market. Okay, so level 3 long and short on the EJ. Okay, the Euro CAD. The Euro CAD was a sleeper today. Yesterday, we had it in level 3, trading long and short. You can see here was what we think is the peak. Hasn't really been locked. We don't see a good valid M to lock this peak into place. So still in level 3, long and short. You can see today's range was super tight, and all they did was chop. And that was because, as you saw, they moved the euro and they moved the CAD, which we'll ultimately see. So the Euro CAD just sat here in a range and just bounced around. Okay. So again, the moving average 50 has crossed the 200 to the downside. So ideally, we're looking for them to hit the stops high and drop, or they're just going to drop this market, okay? Or they're going to come back up. Since we're level 3, they can always come back up, form out the M up here, using this as our context to form out the M, and then drop the market. So level 3, you're going to be flexible enough to trade both ways. Okay. The pound dollar. Pound dollar finally made its move. It kind of sat here in the same range as it did on Monday. Here was our peak low down here. And now it looks like the pair locked this low into place. The 5200 has crossed. The box was blown. There was really no reason to trade this short. And in fact, the 13 pulled out from the 15 or from the 50 200 cross and really lifted away through the Asian box. And you can see price essentially hugged the 13 all the way up to the 800. This would have been a hard trade for me to get into if I was trading trying to get into a long trade, other than taking bounces off the 13. But where, if I was trading this pair this morning, this happened before I got up, but this was a great place to get in short to trade back down at least to the 50 here. And in fact, you can see price stopped immediately at the 50. And on these trades where you're going what we would call counter trend, since our bias was to the upside, the pair has clearly moved up pretty heavily, 1, 2, 3 pushes to the high. You would only want to try to go for 25 to 35 pips on these counter trend moves, and your first target is always the 50. Okay. And then price just kind of meandered around in this consolidation range and has come up and hit the 800 again, forming these small railroad tracks, and now is just sitting in some consolidation. So coming into tomorrow, Thursday, what we're looking for is some more upside on the pair. It's in level 2 now to the long side. So we're looking for some more upside on the pound. And you can see right here, it's sitting on the 1 hour. This is the 1 hour view. You can see that the pair is sitting right here near the 200. So ideally, we're looking for this pair to come above the 200, close above, and continue moving to the upside. Otherwise, it potentially could drop back down, okay? Or just sit here and shop. All right, so the pound dollar is level 2 to the long side for tomorrow. Okay, here's the pound yen. Pound yen, same thing, beautiful move, had the peak here locked. This is a W on Friday, and didn't do much on Monday. And then here was Tuesday, came back down into this range, really tight, moved up. Finally, the 50 crossed the 200 to the upside. So our bias coming into today's session was to be on the long side of a trade. This box was blown too. It was 93 pips. And really, you can see after this had crossed, the 13 had pulled substantially away from the 50. So really, the only way to trade this, if you were a London trader, would be to try to get in on this. There's a small morning star pattern right here to take this up to at least the 800 would have been your trade. This was a hard one to get into unless you had gotten in down here during the Asian session, okay, for London traders. And then you can see it didn't quite do what the pound did. The pound, remember, through the railroad tracks right at the 800 the first time it came through it. This one actually came up, bounced back down, bounced off of it, extended the high through the tracks, and then fell away. I think this was a rather difficult one to trade in the U.S. session. This was right around the time of the U.S. session right here. You can see it just has been consolidating in this zone right here of price action from this high to this low. So going into tomorrow, what are we expecting? We're expecting some more movement to the long side, so we're looking for them to hit the stops low. Ideally, they'd come below the 200, form out a W or a hammer, railroad tracks, cord of wood, morning star to give us confirmation to take this to the long side. Okay, so level 2 long on the pound yen. The pound Swiss. Pound Swiss was an interesting one. We were looking at this possibly as our peak low, and I've got to back the chart up just to give you a perspective here. We had the 5,200 cross way back here on May 31st. Price fell down 1, 2, 3 days, then extended the low slightly on yesterday, on Tuesday, and didn't really form out any spectacular trap move or W like we like to see to lock in the low, not even a V pattern. So we were looking, saying that this was in a level 3 here, which meant you could trade both ways, and then price moved up, and you can see today what it actually did. The 5,200 actually crossed right here. The box was not blown, so we were looking, yesterday we were saying we want to look for longs on this pair. Okay, so the first time to really get in this move would have been right here, when they hit the stops low, form these tracks on the 5,200, forming out the cross here, and this would have been the first place you want to trade it up to the 800, and that would have been a spectacular move. I don't know if any of our regular traders caught this, but it was about 60-some pips up there, and then it threw this beautiful, what I'd call an evening star pattern at the 800, a great place to take this trade down, at least down to the 50 here. And you can see price just kept crashing, and it was very civilized. It did 1, hit the stops high, 2, hit the stops high, 3, make a hammer, and then just go into consolidation, and it's been sitting there ever since. It looks like now it's back down in this level 3, so it's either going to do a reset, because look here, price now, or the moving averages have crossed to the upside initially, the early part of the day, and then in the latter part of the day, late in the New York session, they've crossed to the downside. And if I go to the 1 hour, you can see this beautiful formation here at the 200. So this may be a reset, meaning that price is now going to continue down and actually exceed these lows. And we won't know if it's a reset until these lows are actually taken out. But looking at the price action here around the 200, it looks like a reset. Okay, so again, on this pair, even though I'm saying it's in level 3, it could come down, form out a beautiful W and rise, or it's going to continue with a reset and drop even further. So you have to watch how they handle price coming out of the box. Okay? All right, the Aussie dollar. The Aussie dollar, this was our peak low. And we had yesterday a level 2 long, and it looked like it locked with this W here, locked in that low. And so coming into today's session, we wanted to be long the Australian dollar. You can see the box was severely blown, 124 pips. That was due to, there was some red news. GDP came out, and it was much better than expected, so the Aussie ramped up quite a bit, and the box is 124 pips. The only way to actually get in this trade, if you were trading this, was really in the New York session, right at the start of the New York session, which was right here, when price hit the 50 and formed out these small tracks right here. You could have taken this long, and then, let's see, you would have gotten 50 pips easily. It was 73 pips up to this high before it fell back to the 13, and now it's gone into consolidation. You can see this big gap here. Price gapped up on this chart. It didn't on one of my other charting packages, and that was due to Australia had their NFP day. So NFP is non-farm payroll in the U.S., and that's an event that you do not want to be in the market in front of, and I will go over that when I go over the news for the upcoming sessions. Okay, but that's what that was due to. So tomorrow, it looks like the pair now is in level 3. So remember, level 3, most volatile. We are looking for them to either hit the stops high and drop this pair, form out a beautiful M and start to move down. Or, as we've seen in the Aussie, even though the pair can go into level 3, it can go into level 4 and 5 and 6 and 7. The pair can just, when it's on a trend move, it can really trend. So it may be a case where they hit the stops low, the box is already blown. So remember, what's the rule? If there's confirmation, you want to buy at the low of the Asian box and you want to sell at the high, as long as you have some sort of confirmation. Okay? So long and short, level 3 on the Australian dollar. The Australian yen, the AJ as we call it, here's our peak low, and price started to edge up, stayed within Friday's time frame on Monday, then formed this beautiful W here on Tuesday, and the bias was long. It too, obviously, from the GDP news yesterday, the box was blown, and the only way to get into this was actually to trade it to the upside if you trade this pair. And then you can see it formed out this M right here. This is an M pattern right here, railroad track second leg. It's at the high of the day. This track exceeded this high. There's nothing else other than this. So this would not have been a trade I would have taken, but some people will trade, this is the stops, them hitting the stops of all the people that went long on the break of the high of the Asian box. They essentially came back down and took them all out, okay? And then price resumed its move up and continued to ratchet up throughout the afternoon. And again, you can see its box is blown out due to the Australian NFP data that caused this big candle here, this acceleration to the high. So this pair too, like the Australian dollar, is in level 3. So you want to be flexible, trade both ways, long and short, on confirmed signals. The dollar Swiss. The dollar Swiss is interesting. Here is the peak here that we want to trade away from. Price dropped one day, came back up on Tuesday, yesterday, formed out the M to lock in a short. You can see the 50 crossed the 200 back here and has stayed below the 200. So coming into the session on the dollar Swiss, there wasn't much in the London session other than if you took this railroad track, looks like actually it's like a head and shoulders pattern here, or kind of a 22 a W trade. I wouldn't personally have taken it because these moving averages are like right there, 6 pips away. By the time you get filled and take out your spread, you're lucky if you would have gotten anything. So this would not have been a high quality trade for me to take, but what was high quality was when price came back up here near the high and through this evening star pattern to get in it short. I wanted to be a short seller today on the Swissy. This would have been the trade I would want it to have been in. So this pair, you can see, fell off beautifully down here. And now the pair looks to be in level 2, and we're expecting one more day of drop on this pair. So level 2 to the short side for tomorrow. Okay, here's the dollar CAD. The dollar CAD, this looked like this was our peak, all this price action in here. It was just grinding up and down. Finally formed a beautiful M yesterday to lock this peak in place. And we were saying it was a level 3. We were looking for longs and short on this pair. You can see yesterday in the Asian, today in the Asian session, I guess it's yesterday now, the 5200 had crossed and price actually did make a nice move down with it. So on this one, you definitely wanted to be a short trader on the CAD today. I wouldn't, like the dollar Swiss, I wouldn't have taken this to the upside just because the moving averages were too close, and the better trades on this would have been to the short side. But this was the picture perfect evening star formation. You have 1, 2, 3 to the high, price acceleration, pins to the 200 or pins to the Mayo, pins to yesterday's low. You see the blue tracer right here. You've got great confirmation to get short this pair. The bias was short. You wanted to be a short seller, okay? And you can see if you had taken this trade right here on this close, you would have easily gotten 50 pips. It was a sweet move down, okay? And then lastly, the dollar yen. The dollar yen, here was our peak from Friday, the peak low. And you can see the moving average, the 5200 kept crossing. Oh, we're going up. Nope, we're going down. Oh, nope, really, we're going up. And we finally got some acceleration up on Tuesday. And then coming into today, you wanted to be a long trader. We had a level 1 long coming into today's session, and it didn't disappoint. Right here, coming out of the box, you had 1, 2, 3 to the 800, formed a morning star right at the 800, and then price moved up beautifully to this high. And being that it's the yen, it probably looks more than it is. Oh, wow, it's 43 pips. That's big for the yen. And then you had a couple different opportunities to get in this long if you wanted to trade it off the 50 here with these pins and then the railroad tracks right here. But you can see price never really went anywhere. It just kind of is consolidating right now. So coming into tomorrow, it looks like we still can have some more upside on the dollar yen. So we're calling it a level 2 to the long side. So now I'll do a quick recap. So on the euro dollar, a level 2 to the long side for tomorrow. Look for them to hit the stops low and then rise the pair. On the euro yen, it looks to be in level 3. You want to be flexible to trade both ways, long and short, on confirmed signals. Euro CAD looks to be still in level 3, long and short. The 50 has crossed the 200. As long as it stays down there, you will want them to hit the stops high and then drop, or they're going to come down to the 800, form out a W, and then take it back up. So just only trade on confirmed signals, but be willing to see both long and short on the euro CAD. The pound dollar, we've got a beautiful cross here, and we're looking level 2 to the upside. We want one more day of rise on this pair, possibly. The pound yen, same thing, level 2 long, looking for them to hit the stops low and then rise again. Pound Swiss, in level 3 it looks like. Possible reset on the 1 hour. This is the one, remember. It's either going to hit the stops high, form out an M, and drop, and once it breaks these lows and closes below, we know we have a reset, and there will be more downside. Otherwise, look for them to come down here, possibly, form out a W, and then rise out of here. Australian dollar, level 3, you want to be flexible to go both long and short on confirmed signals. The Aussie yen, same thing. Level 3, you want to be able to go long and short on confirmed signals. The dollar Swiss, level 2 to the short side. Look for them to hit the stops high using the moving averages and drop. The dollar CAD, level 2 short, also look for them to hit the stops high and then drop the pair. And the dollar yen, finally, level 2 to the long side, look for them to hit the stops low and rise. Okay, now let me just go over the news for tomorrow because I think this is important for everyone. I have my calendar on Forex Factory set to only filter white and red, white being bank holidays, so I want to know when the bank holidays are, and I want to know when the red data is because that's the critical data sets. And there's 3 red data sets that I will not be in a trade in front of, and if I am in a position before they are scheduled, I will make sure I exit the position. And there are also data sets that I will trade once the 15-minute candle has closed after the news. And that is NFP for any country. And remember, tonight we have the Australian. It's called the employment change. It's their version of our NFP or non-farm and their unemployment rate. The other one is CPI, Consumer Price Index. You see right here, this one is coming up for tomorrow morning for the Swiss franc. So pairs that have the CHF, pound Swiss, dollar Swiss, euro Swiss, beware of this data. This calendar is set to California time since that's when I care about it. So this would be 3:15 New York time that this news will come out on the Swiss franc, and you don't want to be in a position ahead of that. And then you've got the interest rate decision out of the UK at 7 a.m. Eastern, okay? So the 3 red news items are NFP, non-farm payroll in any country, the CPI, the Consumer Price Index in any country, and FOMC, which is our version of interest rate announcements. So any interest rate announcements in any country you don't want to be in front of. Bernanke is going to testify tomorrow morning. Sometimes the market doesn't really react. It's not, and sometimes it does. It's not one, though, that I would necessarily stand aside. Only when he makes any sort of interest rate, announcement would I be cautious. But just him testifying doesn't give me pause to stand aside. Okay, so those really are the most important ones. And then Friday, you can see I have none of them are highlighted. We've got some trade balance numbers. There may be some volatility. This is a CPI number, and it's in China long after we're all gone on Friday. So I know my broker's platform isn't open. So, and those of you who've been in the DMR with us know that when I take a trade, I always take a screenshot of my entry because that's how I actually learn. Seeing things in hindsight, yes, helps you, but I've also found that taking them from the hard right edge so that people can actually see and hear what I'm thinking might help some people actually see these trades as they unfold. So you'll see me take a screenshot of the entry, and then you'll see me take the screenshot of the conclusion, win or lose. So here was the euro dollar I was talking about during the Asian session. We were on the webinar, and I noticed this, and I went, wow. And I want to be long the euro. I'm going to get in this trade, at least try to trade up to the 800, okay? I had a 20 pip stop on this trade. So I entered on the close of this candle. And then you can see, here's the conclusion of the trade. Got in right here. You can see the entry. Stop line is right there. And I actually let it go. It just chopped around here and didn't do much, so I kept the trade on and let it pursue even further. And you can see it limited out here for 50 pips during the webinar. At the same time, you'll often see this when the euro is setting up. The dollar Swiss will do the exact inverse. And in fact, I flipped over quickly to the dollar Swiss, saw exactly the opposite. I wanted to be a seller of the Swiss franc coming into the session. And we had it as a level 2 short yesterday. I saw, double railroad tracks here right at the moving averages. I'm going to get in this thing short with a 20 pip stop. There's a screenshot. And then here you can see, here's the actual trade, and came right down here. And I don't know, for some reason, I only set it for 30 pips. I don't know what I was thinking, but you can see, or I pulled myself out because here's the actual limit down here. I don't even know what happened. But anyway, I got 30 on that one. Okay, now here's this morning on the euro. Remember, I had taken it long last night in the Asian session on the webinar, got 50 pips. I woke up right in here, like I said, I saw this candle close and I went, oh my God, I've got to get in this trade long. I want to be a buyer on this pair, and this is the perfect 1, 2, 3 to the low. It's hitting the Asian low where price rose out of there, and they're hitting the stops. I want to get long. I had a 20 pip stop. It was 9:15 Eastern, 6:15 in the morning, California. And then you can see right here, price limited me out for 50 pips. Okay, that's the euro. Now, I'm looking at the euro, and they're hitting the stops using the 50, and the 13 starting to poke its head through again. And measuring, Steve says they will hit the stops 25 to 50 pips. Well, when I took my measuring tool from this high down to where they were hitting the stops, it was 30 pips. And I thought, I've got to get in this long. This is really only the first push up. It's going to run at least possibly up to the tracer from yesterday's high. So I entered another long, and I had a 12 pip stop. I wanted to keep it really tight on this pair. Okay, and then you can see the trade took no heat whatsoever and immediately came right up like a magnet and limited out for another 50 pips. So between the Asian session, early New York, and then mid New York, I got like 150 pips just off the euro last night. And this is what knowing Steve's material can do for a lot of traders once I get this. And let me show you, I took a lot of trades. There were such beautiful setups this morning. I just couldn't believe it. This is the CAD, the dollar CAD. Remember, I said we had the cross to the downside. I wanted to be a short seller away from this peak. So when I woke up right here, I saw this, and I went, oh my gosh, that's beautiful. They're hitting the stops. They've had price acceleration up through the 5,200. They're hitting the stops. I have to get in this short. So on the close of this green candle, I got in this trade short. I sold it right here. Here's my stop. I had a 17 pip stop on the trade. And here is the conclusion. Took a few pips, like 4 pips of heat on the trade once I got in it, and then price just accelerated down and finally took me out right here for 50 pips. And then you can see it kept moving. Okay. Dollar Swiss. Remember what the euro was doing on that second trade I took in the early New York session? Well, dollar Swiss, when I toggled over to it, was doing the inverse. Remember, I had taken it short here on the double railroad tracks in the Asian session. So when the euro trade long was setting up, I flipped over to this dollar Swiss and said, okay, now they've hit the stops high. The euro dollar hit the stops low. I'm taking this short. Sold it right there. Here's my stop, 17 pip stop. Out with 50.
Would you consider the last candle with the long pin unable to hit the new high as a confirmed M, or is this too early?
Too early for me.
Yeah.
I don't see anything that, would
nothing right
get
now.
me excited. Yep, exactly. Oh, somebody's asking me, Cart, why do I trade the Asian session? Okay, normally I don't ever trade the Asian session, but because I was here listening to the webinar, I just had to keep myself busy. So, and I saw these setups, and like Steve says, you know, there's a lot of traders that once you get his methodology, you can pretty much extract pips or moves out of the market anytime, any session, if you know what to look for. And that's what you'll learn in the DMR, hopefully, by listening to all of us talk. But it's rare that I trade the Asian session. Ask Car. I don't think I've ever showed an Asian trade.
Nope, never.
Never. And it was just because, like I said, and I even took some trades on Sunday when I was on the webinar. I took a Euro trade for 100 pips because I was sitting here and I just thought, well, I can, you know, make the best use of my time. And here actually is the trade from Sunday night. While we were on the webinar in the Asian session, I wanted to be a buyer. The 5,200 had crossed earlier. Here was the hammer, and I actually bought right in there. And then here's the progression of the trade. I had a really tight stop, and I moved the stop to lock in 50 pips, and then you can see what it did. And I ended up going for the 800, and it limited out for 100 pips. And that was all because I was sitting here on the webinar. And I did the same thing on the Aussie dollar, too. So, it depends on what you're doing at the time. And I just was sitting here and thought, I can trade these, too, while I'm sitting here listening.
Okay, in the 15 minutes, when the 50 crosses the 200, do the buyers will always long buyers compared with higher time frames?
Yeah, for the most part. It depends on where price is in the cycle. But, yeah, if you do get the cross, you might, like in this case, you might be looking for longs. And it just so happened that, we had a peak, or what we were anticipating to be a V bottom here. So we were looking for price to rise out of here. Okay. But again, like I showed you, I think it was it the pound Swiss? The pound Swiss today, you had a cross to the upside and then a cross to the downside. So that's why you got this big move up and then you got the big drop. So they're just trying to, it's all about where the money lies, and that will become apparent once the pair starts to trend. And remember here on the dollar yen, cross to the upside, no, going to the downside, which, until price actually moved out of here, this cross to the upside. So you can't always say that it's going to be the bias, but a lot of times it's one of the good reference points, yes. When I get into talking about pushes, the 13, and I changed my color here because I didn't use this all the time, but my 13 EMA is this dotted green line. And this is important for trading pushes once the 5,200 have crossed and the 13 pulls away. You'll see price often, if it's in a strong trending move, it won't even come back to the 50 or to the water. It'll just stay and march alongside this 13. These all are important to me, the 200, the 50, but mostly it's the 13 and the 50 during the actual trading session.